The official story is that the U.S. real estate market is kind of trending sideways. But in this explainer, we're going to dig into the latest Green Street report, and you'll see that's not the real story at all. In fact, what's really going on is a dramatic tale of winners and losers.
So, what's really going on? Is the market about to take off, or is it on the brink of a collapse? Well, the crazy part is, the answer is kind of yes to both.
And that's because we're not talking about one single story here. The Green Street report actually shows us there are at least 9, that's right, 9, completely different things happening all at once across different property sectors. From the offices we work in to the apartments we call home.
So yeah, the official headline is that the market is trending sideways. Sounds pretty dull, doesn't it? But trust me on this one, the real drama is hiding just under the surface.
At a glance, everything seems pretty calm. The report even says the changes have been modest. But here's the thing, that average is super misleading. It's hiding this huge gap between the winners and the losers. And to really see what's going on, we need to get a handle on one key concept.
And that concept is the cap rate. Now, this might sound technical, but it's actually the key to unlocking the real story of what these properties are worth. So let's do a quick breakdown.
Okay, so formally, it stands for capitalization rate, but all it really is a way to figure out the return you might get on a property based on the income it generates. The easiest way to think about it, it's like the property's annual yield. Now, here's the only thing you really need to remember. It's an inverse relationship. A low cap rate means a higher price for the property. A high cap rate means a lower price. So it's simple. When cap rates go down, prices go up. And when cap rates go up, prices go down. Got it? Good.
All right, now that we've got cap rates down, let's see how this plays out in the real world. It's time to meet the stars of the show this year.
And the undisputed winner, leading the pack by a huge margin, is senior housing. Seriously, it's just blown every other sector out of the water.
So how much are we talking about here? Property values in senior housing are up a whopping 12% over the last year. 12%! In a market that's supposed to be trending sideways, that is just a massive number.
And this chart, wow, it really drives the point home, doesn't it? You've got senior housing soaring up there at plus 12%. Meanwhile, apartments are totally flat, zero change. And lodging, hotels and stuff, they're actually in the negative. This isn't just a different story, it's like they're on different planets.
So what's the secret sauce? Why is this one sector doing so well? Well, the report basically points to a perfect storm for success. First, you've got a growing customer base. The 80-plus population is expanding. Second, those customers can actually afford it, thanks to healthy home equity levels. And third, there's not a lot of new competition being built. That is one powerful combo.
Okay, but it's not all so clear-cut, not just straightforward winners and losers. Some parts of the market are telling a much more complicated story, one full of surprising comebacks and really mixed results.
Let's take a look at the office sector, for example. We all assume it's been pretty much crushed by remote work, right? And for the most part, that's true. But if you dig into the data, there's a really surprising bright spot. Okay, check this out. Across the country, the average cap rate for offices dropped by 25 basis points. That's 0.25%. So prices ticked up just a tiny bit. But then, look at New York City. Cap rates there plummeted by 145 basis points. That is a huge drop, which means a massive surge in property values. New York is a total outlier here.
So why is New York bucking the trend so hard? The report says it's because of, and I'm quoting here, solid market rent growth and pre-pandemic levels of leasing volume. So what does that mean? It means for the best office spaces in New York, demand is roaring back. Big time.
All right, so let's pull all these different threads together and get the final snapshot. We've seen the star performer, we've seen the surprising comeback, now let's put it all into perspective. And this really sums up the whole story, this divide. On one side, you have our star, senior housing, and on the other, you have sectors like industrial. The report calls it richly priced, which is a nice way of saying expensive, and it's also facing falling rents. You couldn't ask for a more stark contrast. So what should you take away from all this? Let's break it down. First, senior housing is the clear winner, hands down, and it's all thanks to strong demographic trends. Second, the office sector is a real mixed bag. It's struggling pretty much everywhere, except for New York City, where it's making a remarkable comeback. And finally, some of the hottest sectors from a little while ago, like industrial and single-family rentals, are now seen as a bit too expensive and are facing some headwinds. Which, of course, brings us to the big question.
In a market that's split in so many different directions, where does the real value actually lie? Figuring that out is the key challenge, but it's also the biggest opportunity in real estate today. Thanks for joining me for this breakdown.